All right, folks, it's the last day of the financial year. It's the last day of the first half of the year, right? So the 30th of June marks a very volatile first half of the 2025. And, brace yourselves, because most likely the second half will be even more volatile. What I want to tell everyone is the Fed in the beginning of the year was prophesied to cut 75 to 100 basis points. For the first quarter, that was what everyone was expecting. Now, on the second quarter of the year, no one was expecting pretty much cuts anymore, all right? Though I think a few big banks were expecting maybe 2 cuts or 1 cut to quarter 4 until end of, pretty much December in 2025. Well, let me tell you something. We are expecting now 75, and they're very priced in already in a very advanced stage. Okay, so for July, we're not going to have any cuts, so we'll be maintaining at 425 to 450 target range. Going to September, October, and December, these are the 3 months they're going to be having after July, having meetings after July. That's when we will be seeing 25 basis points cuts consecutively. All right, and that's what the CME Fed Watch tool is saying. So for July, here it is. You can see on your screen now that no cuts are predicted for the month ahead, pretty much. Expectations are 80% or 70%, something around those numbers. There are no cuts predicted. Then we go to September, this image here. We can see there is some sense of pricing already for a cut of 25 basis points from 425 to 450 to 4 to 425. Then we go to October, we see already another 25 basis points priced in, and then we go to December and we see another 25 basis points priced in. So that accounts as in a total of 70 to 75 basis points priced in until end of this year. All right, so yes, the risk on is back, and therefore we will probably see the US dollar continuing to go lower and lower and lower. All right, we can see on this chart here that the US dollar is very consolidated at the moment. All right, so what I think is waiting. That's basically been waiting for the NFP data on the week ahead. All right, so on Friday, we're going to be having the unemployment, that is actually going to be on Thursday. Interesting. Okay, it's not going to be on Friday. It's going to be on Thursday for this week. Not too sure why. Maybe that's wrong, but we're going to see. I'm going to update everyone during the week as we go. But Thursday, 3rd of July, we're going to be looking at the non-farm payroll. Expectations are 120,000 from the previous of 139,000, so pretty much 19,000 below the previous, the expectations. Unemployment rate is at 4.3. That's a bit of a problem because we've been looking at the NFP, slightly decreasing, but not that is stagnated. And we look at the unemployment rate and we're looking at a little bit higher and higher every month that it passes. All right, so that's a bit of a problem in my opinion, but we will see because it's still under the Fed projections. All right, so they've, as I say, the last projections they've released, and I've talked about that into the webinars, I've talked about that into the videos, into my blogs, so you should be following all of those kind of things. By the way, we do have webinars every Tuesday, Wednesday and Thursday from 4 to 5 p.m. in Sydney time. So if you're not yet into the Telegram group, you're not participating into the community, you should join, and it's free. The link is on the description. You can join me into there, and that's where we'll be sending the Telegram on the Telegram, where we'll be sending the Zoom link for you to join the webinars every Tuesday to Wednesday and Thursday. And also the blogs get sent to your email if you're already a client with us. If you're not and you would like to try it out, go into the ACY website, go into Learn, and then Education or Market Analysis, and you can find my name there, and you can look for the analysis every single day. I post content there as well. Now, coming back to here, Don't forget to subscribe to the channel and give us a thumbs up, because that helps us quite a lot. Now, the average hourly earnings is expected to have a bit of a decrease from 0.4 previously now to 0.3. And then we got a bunch of other data, but that's what I think will be the most important data for the week. All right, so we do have German CPI and Euro CPI as well. Euro against the US dollar have been raising primarily because the US dollar has been losing value, not because there is any strength on Europe. I think ECB still, continue to cut the interest rates slowly, but they will get there in a sense. So very hard to not believe that if US dollar continue to fall, euro will continue to go higher. All right, so I believe on a euro dollar up. Also, we have Japanese yen showing up some tactical long positions into the book. So that means basically the market is shifting regime from risk off that were in a couple of weeks ago now to risk on, buying Australian dollar, buying New Zealand, buying yen, buying euro, buying pound, and selling CHF, selling US dollar, selling gold. All right, so it's still, for the week ahead, is still my preferable trades. US dollar, Japanese yen short, and then we will continue maybe to implement an euro yen short as well, around 170, focusing on 168 to 100 as a target. I've discussed that on my blog today. You should be looking at those things, because that's where you're missing the gold. That's where you're missing the the good knowledge I've been passing over for everyone here every day. So plenty of things happening over the week, and I believe most likely, hopefully, we're not going to have any surprises from Trump. We didn't have any surprises over the weekend, so we may be having surprises over the week, but we will see, and I will be updating everyone here as we go. Besides that, guys, I hope everyone have a lovely week ahead. Don't forget to subscribe to the channel, give us a thumbs up, and join the Telegram group, because that's where I will send the link for the Tuesday, Wednesday, and Thursday webinar. It's free. We don't charge anything. It's completely free for everyone. All right, see you there. Have a great week, and manage your risk, because the things are probably going to get very, very crazy in the second half of this year. But I chat to you tomorrow onto the webinar, or I see you into the next video. Bye bye.